Okay, I may or may not have forgotten to do this yesterday. I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. Please consider your own financial conditions before deciding whether trading is suitable for you. Please pause the video, read this entire disclosure, learn the disclosure, love the disclosure. It's very important. Position disclosure, Dropbox, MGI, which reports earnings tomorrow morning, which was BOEX, but now WeWork, and INSG. I did not keep any Apple today as they are reporting earnings. Okay, so again, Apple reports, they always report at 4:30. So usually on these days that Apple reports, we do like a real quick meeting, and then I'll stay on the radio and I'll stay live, and we'll talk about Apple numbers as they come out. I'll share them as they come out. I may or may not trade Apple depending what it does. I probably won't, but you never know. So we'll see how that goes. So we'll do a quick meeting here. So talk about Amazon earnings first real quick. These earnings are not that good. Amazon EPS of 612 misses 892 estimate. Sales 110 billion misses 110.8 billion misses 111.6 billion. So EPS Amazon missed, sales missed, and they see their 4-quarter net sales 130 to 140 billion, estimate 141.5 billion about. So they missed EPS, they missed revenue, they missed sales, they're missing guidance as well. Amazon sees several $1 billion of additional costs in Q4. Amazon, reporting bad guidance, and Christmas is around the corner. It's kind of surprising. It's definitely not a good look. And like Josh was saying here, we'll see what Apple does at 4:30. But if Apple misses and is down, Q's might not be toast, because we still got Google and Amazon, or Google and Microsoft holding up well. These just kind of chopped around today, but Google and Microsoft look okay still. So we'll see. This was the big thing that we were watching from last quarter. Remember last quarter, Amazon, they had a pretty big miss as well and a pretty poor reaction to it. So here we go, the second poor earnings report from Amazon in a row. Not what the bulls love to see, but it is what it is. So let's do a quick meeting, just kind of like a review of today's action. Market as a whole, we were kind of expecting a more choppy day. The market was setting, we had the shooting star 2 days ago, pulled in a little bit more. ADMA has basically caught up to this base now. So we were expecting a fairly, slow, choppy day, leaning towards the bulls, obviously, because again, Google and Microsoft had great reactions to their earnings reports. So, you got to lean with the bulls. We're in all-time highs. We're in an uptrend. But market as a whole was basically waiting to see what Apple and Amazon was going to do. So I thought the market was a little bit out of play today. But we definitely had some fire calls for sure. So first, I know my main focus off the open was definitely this Apple, which we'll see what happens at 4:30 in 15 minutes here. But Apple was opening basically in the 149.70s here, right in front of this 150 level, which this couldn't have built out any more perfectly, honestly. This was just technically perfect coming into today. Clearly, this 150 was a bit of a level. We poked through it a couple times, but you love to see when you poke through, fail, and you fail, but then you don't break down either. You just keep consolidating and keep building up into it. So Apple is building this ascending triangle into this 150 here. That was a big focus for us off the open. I know I bought Apple 150. I know a lot of you guys bought Apple through 150. So great job in that. You basically had to buy it right away and, just ripped off the open. Spent the rest of the day consolidating and kind of just chopping around here, but great move in Apple. To the point where I almost didn't even think we would get this move. I thought maybe like 152 I was a little surprised to see how strong it was just because they're reporting tonight. But that being said, it was a technical beauty coming into the day today. So Apple 150, that was a great trade. I know a lot of you guys caught that, so good job. Congratulations if you did. Another focus name that we had was Lucid, LCID. So just to talk about this one I missed because I was focusing on Apple. But so this 28 level, this is a great example of a gap and go. So, there's two types of gaps. There's like common gaps and breakaway gaps. This was a breakaway gap today. So this Lucid 28 level, we've been talking about for at least a couple days now, as it's kind of butted its head against it and failed. But you can see, this level goes back quite a ways here. Maybe not so important over there. But even here, Lucid 28, you got to close above, but then immediately failed back down. And these tails, that's how you know the level's there. It's not going to stop at 27.99 every single time, and then first time it goes through 28, it's going to just go through. Stocks don't trade perfectly like that. But these tails tell you that that's the level. Gets above 28, but fails and closes back down. This gets, this tails 27.90s. This barely tails over 28, but then comes back down. Tails over 28, comes back down. And then 2 days in a row now, tails over 28, come back down. Yesterday was a focus for us, which it kind of worked. Hopefully gave you a kick or two, but ended up failing and coming back down. But the key is every single time we were opening below 28 and trading through 28. Now, come to this morning, we're gapping up over 28. Lucid opened today 28.54 about. So that's a breakaway gap over this key level. It's easily could have opened and, just failed right away back down through 28. But if it's going to be a breakaway gap and it's going to work well, it's going to hold that level. It's going to hold 28. So this was another main focus of ours, this breakaway gap. We're saying either, basically buy versus 28, see if you get some type of flush into 28 to play versus. And it happened really, I think in the first minute, maybe the first couple minutes. I wasn't watching it because I was so focused on Apple. But you can see the first 5 minutes here. We opened 28.54, tailed down with a low of 28.08, and then tailed right back up here. So nice candle here with a tail off of that 28. Again, key daily level that we failed. Many fails. And then finally a breakaway gap over that. That was the big difference, the key for today's Lucid gap, and why, there's a big reason why I ran today. It was a gap and go. So again, this tailed off 28. A lot of guys focused on that today, and it gave plenty of opportunity too. Just because you didn't buy off 28 off this pivot doesn't mean you couldn't have still gotten in. It probably was a little hard in this trend, and I know some of us, myself included, even shorted this rip into 40 here. So we were looking at like 35 was a big level. It cleared this 30. It cleared 33. 35 was a big level, and then 40 wasn't even much of a level so much as just like a psychological number here. I guess it kind of failed over 40 down like way back then. This was when this was still the SPAC CCIV, I think it was Churchill, the SPAC. More just like a big psychological number, but that was extreme extension into this here. When Lucid was trading, 30 upper 38s, upper 39s, your 5-minute ADMA was down in the 36s. Your 15-minute ADMA was down in the 34s. That's extreme extension. Coupled with volume, you can see the biggest volume bar of the day for the 15-minute was at the top. Same thing with the 5, or I guess it was the bar before the high here. But look at this volume. This is upside capitulation volume in Lucid on this rip up into 40. So this tailed beautifully right off 28 for a gap and go over that resistance level. That was great. And then this upside capitulation, which I think a lot of us, caught some cute shorts here. I definitely didn't hold it for this whole move down, but that's upside capitulation volume if you want to see a good example of it. Extreme extension on the 5 and 15 coupled with the highest volume of the day, that's exactly what it looks like for upside capitulation. So Lucid was great. And then I guess two other focuses that we had were Ford earnings. Ford had a great earnings report, was gapping up a lot today though, so it was a bit tricky to play. All you could really do was buy through the opening high, which basically was like this 1720 or so. I'm not gonna look at the minute chart there, but basically like mid to lower 17s. You had to buy through the opening high of Ford. But again, that's, a play that I like to talk about with earnings names. It's kind of like the opening range breakout. It depends on the name. It depends on the liquidity. It depends on the volume on the open. Sometimes you only need to wait 30 seconds. Sometimes you need to wait 2 to 5 minutes. But Ford, you could have bought through the high. That gave a move up. But then it bull flagged. Notice the extreme extension on this bull flag. You don't want to be playing this bull flag when the ADMA is way down here. You want to be playing this bull flag when that 5-minute ADMA catches up to the base of it. But this ended up rolling over pretty hard. And again, it just gapped up a bit too much here. Even when it came back down to this 5-minute ADMA, look where the 15-minute was. The 15-minute ADMA didn't catch up till basically like 11:30, 12 or so. So once you see a big move like that, immediately be reversed and the whole thing's gone. Usually that puts it out of play. But you don't want to be shorting it either because it's trading up off a great earnings report. It's trading on earnings. It's independent to the market. So that doesn't necessarily mean short. It just means it's probably out of play. And after this move, this should have built out some type of bull flag consolidation up here. It shouldn't have given back this move, but it did. So it just spent the rest of the day kind of chopping sideways in a range, which we were able to identify. And then another name that we were watching was this LC Lending Club. So Lending Club had a great earnings report as well. They had a great earnings report last quarter, followed up again this quarter with another great earnings report. Some of us played this. I don't know. Did any of you guys play this today? I think some of you did. This held its opening low. 5-minute ADMA caught up. But this looks hard. Honestly, this looks a bit difficult to play here. This 40 level, the opening low held. That was really your tell here. It came back down to 40, blipped through 40, but traded right back above it. It definitely looks a lot cleaner on this 15-minute chart here. And that's why I'm always saying intraday, like during the day, is, look at your 5 and your 15-minute charts. Just because your 5-minute ADMA catches up, that's not necessarily your golden ticket to buy here, especially when names are gapping up a lot on the daily chart. The 15 minutes pretty important as well. So that's why you're not just necessarily buying LC on this first touch of the 5-minute ADMA. Same thing with Ford, because it's so extended on the 15-minute. And you can see, like, even for Ford, it just kind of chopped sideways, but that's really where it based out here. And LC, when this 15-minute ADMA finally caught up to this 40 level here, that kind of based it out a little bit, and it looks a lot cleaner on the 15-minute here. So LC was good as well, but that was it really. I think our two biggest focuses were Apple and that Lucid, which both turned out very well. So yeah, if you guys have any questions, I'll try to answer them in a couple minutes here, and then we're gonna have Apple coming out at 4:30, so I'll probably, go back to my news feed and watch Apple numbers as they come out. I had a question. I usually keep my 1-to-1 at 30 to 25 cents risk, and for Momo trades, I'm usually taking more risk comparatively. Should I also take 1-to-1 as high as my risk? Let me reread that. I had a question. I usually keep my 1-to-1 for Momo trades. I would say yes, Sahil, as high as my risk amount, which should be $1 or more. Well, it's just space risk to measure your total risk on the trade. So, if you're risking 25 cents and you want to risk $100, then you're probably buying 400 shares, right? Momentum's a little bit different though. Like, it depends on the trade. If it's momentum and if it's like a meme name, then you definitely want to just trail and trail and trail. If you're looking for like a reversal on the daily, sometimes you might want to take less than 1-to-1. If you're going for like big P&L, sometimes if it's like a cute, just like you're looking for a cute short like we were in Lucid, sometimes I'm covering it all at 1-to-1. So more like opening morning trades. Yeah, I would be taking your 1-to-1 when you can. It's just easier once you cover that risk. It's easier for you to trail it. You're not as worried about giving back profit and losing money in the trade after it. So I would say yes. But if I didn't understand your question, feel free to reword it for me as well. Apple's not out yet. Apple's at 4:30. Where you executed Apple by buy stop order? No, I upticked 150 into Apple. It was opening right in front of 150. I traded up right to 150, and it was tight enough where the low of the day was like 28 cents, 30 cents risk. So I bought 150, as opposed to like having a buy stop at 150.01. I might get like 10 cents slippage on that. So I'd rather just buy 150 and anticipate that 150 is going to break, which is what I did today in Apple. OSTK. Oh, OSTK was another great idea today as well. Is that a... Wow, yeah. Yeah, wow. I mean, you basically had to buy this through the like opening 1 minute high there today. And then other than that, we had an inside 5 here. I remember calling this out as well, although it was still a little bit extended on the 15-minute there, but you kind of had a bull flag that came back down, 5-minute ADMA caught up, and then you had this inside 5 to play, which ended up paying pretty well. So that could have been a play for OSTK if you weren't in right off the open. But that's a nice inside 5. Derrick always talks about you don't want to buy every inside 5. If you do, you'll lose money. This is a nice inside 5. You get your move up, you get your tracement back to equilibrium, and then you get an inside 5 that breaks higher for continuation. That's a nice inside 5, as opposed to like, I don't know, like this inside 5 or something like that, which I guess even like that worked a little bit and was trend continuation. But here, once, your moving averages are sloped up, pointed up, heading higher, once you get over here and your moving averages are just flat out and you're just flatlined, don't be buying these inside 5s. Buy it when you have a clear trend. So yeah. All right, Apple is going to come out in 10 seconds. Let's see what happens. I'm scared. Just kidding. Whoa, big downtick. Apple below 150. That's why you don't keep it. That was the risk anyway that we talked about. This looks ugly. They missed slightly on revenue. They matched EPS. So EPS matches. They missed on revenue. Apple is not allowed to miss. So Apple was pricing about 4.5. Apple closed 152-ish, so like 148-ish should be support. This 145 probably gives a bounce as well if it trades down to 145. Yeah, that might be the first time I've ever seen Apple miss, honestly. They missed on iPhone revenue. So definitely be careful here. If Apple was pricing like 4-ish, you might want to give it 2 times that move, 8-ish. So 152. So like like mid 144s, which matches up with that 145 level as well. Probably gives a bounce. Apple 145, mid 144s. Probably gives a bounce, but be very careful. Here's 145. Here's your mid 144s. Might get a cute bounce. It's definitely trading heavily though. See 145 selling there. 145 broke. iPhone revenue missed. You can see there. Their service revenue beat, but iPhone revenue missed, and they were supposed to have good iPhone revenues. Probably partially due to the chip shortage. It's an ugly miss, though. Apple is not allowed to miss. Okay, so here's your bounce off that 145, mid 144s there. Though we talked about 2 times the options move. You just got your cute little bounce here. About $1 or so, I would take it. Might get a little bit more, but usually that's all you look for in those options moves, is just like a cute little bounce there. But if anyone bought this off 145, mid 144s, here's your bounce. I'm just watching the tape here for a minute. That's ugly though. Yeah, maybe they buy up Microsoft and Google tomorrow. But Apple missing, Amazon missing, that is not ideal. I would not buy mid 144s now. You had your chance. It went to mid 144s. It bounced $1.50. I wouldn't rebuy it now though. I find it only really works well the first time. Not that it can't work, but that's crazy that they missed. Maybe they buy up Wii. I don't know, maybe. I wouldn't count on it though. Yeah, there's some big, well, MGI tomorrow morning, and then there's some big oil names reporting tomorrow morning as well. I believe ExxonMobil reports, Chevron reports. Microsoft is trading up a little bit. It's funny. Obviously, the Qs are trading a little bit down. Amazon even lower. Trying to hold this 145 level. And that mid 144s was just purely on 2 times the implied options move. Nice bounce back. 146 still selling though. So, I mean, Apple trades pretty cleanly too. This is a good practice for like tape reading to, if you guys want to see like how you identify sellers and buyers. It's like one, I mean, there's nothing much here. It's kind of a battle between buyers and sellers. 145 buying, 145 broke, 145 selling now. You see all those prints going off. It's breaking though. It's not, it's trading back and forth here. This is kind of a battle going on. All right. All right, let's get back to the meeting. Up 140, back to 145. 145 still holding. Might just get stuck down here. All right, yeah, let's get back to the meeting. Okay, well, we were waiting, we waited, and now we're through them. And they both missed. Apple and Amazon both missed. Kind of crazy. So tomorrow should definitely be interesting. So yeah, if you guys have any questions or anything, please feel free to ask. I see a question on YouTube here from Ernest. Greetings, Pat. Any comments on what gives traders the wherewithal to know and determine on a daily basis whether or not a stock or equity is in play? Good question, Ernest. In play, usually, if I were to pick like a characteristic of an in play name, it would be volume for sure. And it would be relative volume in that name compared to prior days. So like Lucid, for example, today, you can see the volume in Lucid here. Look at this volume in Lucid. You know, usually you have some big volume off the open. You had some, yesterday was the day that it traded through 28, so that's why you're seeing even more volume yesterday off the first 5 minutes compared to the prior days. But look at this volume in Lucid today throughout the whole day, and then this is where it topped out in, you know, the capitulatory volume. But volume usually determines whether or not something is in play. Other factors come into that, such as Lucid, again, was a breakaway gap today over this 28 level, which again was, you know, failed at multiple times, and then we gapped over that resistance level today. So Lucid was going to do one or two things. It was either going to be a gap and go to the upside, which it did, or it was going to fail 28 right away and trade back down through 28 right away. But it didn't. It held 28. It flushed down a little bit into 28, but it held and traded right back up. So, you know, factors such as technicals, if it's in the news, whether there's like a press release on it and they have news, or if there's a sell side analyst note on it, usually like a solid upgrade. So they're upgrading it from, you know, whatever neutral to buy. They're raising the price target on it. The price target that they have on it is higher than the current market prices, decently higher. I like all of that, and then you combine that with volume. So you get some type of catalyst, whether it's a technical catalyst, a news catalyst, an analyst catalyst, something like that, and then you just match it with volume, where again, I don't use a scanner or anything like that. I'm simply just looking at the volume compared to prior days volumes here. Lucid was very, very in play today. Let's look at Apple's volume today. Yeah, Apple, you see this volume compared to prior days, how it usually trades. You can just eyeball it and see Apple's very in play today. That was just purely technical. I mean, obviously, like Ford is going to have higher volume because it was based off earnings. But that would be my answer to your question, Ernest, would be, what gives traders the wherewithal to know and determine whether something's in play. Usually some type of catalyst, whether it's news, earnings, a sell side note, something like that. And then volume. Volume is everything. Maybe not everything, but volume is crucial for in-play names. You need to have that volume. You need to have that relative volume higher than what it usually does. And again, I usually just kind of eyeball that. Apple trading up a little bit. Let's see. Do we have any big earnings for the rest of the week, or was that it? Yeah, so a couple big oil names tomorrow. ExxonMobil, Chevron, AbbVie, MGI. Someone on YouTube said Walmart tomorrow. I don't see that, though. Let me see if I can find an earnings date for Walmart. Nah, yeah, I'm seeing Walmart reports November 16th, so Walmart's still a couple weeks away. Unless you were just asking if Walmart is in play for tomorrow or something like that, which it could be on an inside day. Is this an inside day? Yeah, Walmart has an inside day today. Walmart's not a great trading vehicle though. It's pretty hard to day trade, more of a swing type idea typically. But Walmart inside day. But yeah, their earnings are a couple weeks away still. Pat, how frequently do you use market orders versus limit orders versus trailing stops when exiting a position? Good question, DJ. So I never want to never say never, but I never just like mark it out like, okay, this is good, like mark it out. I don't really do that when I'm exiting a position. Usually if I'm marketing, it's to get in something, like basically what I did for Apple 150 this morning. And then I have limit orders. I almost always exit with limit orders when I'm taking profits. I want to add liquidity, so I get filled on the offer for limit orders. And then usually, unless it's like a cute scalp trade or something like that, you almost always have to just trail with a stop for the rest of your position, whether that's a full 50% because you're going for something big, or it might just be 25% of your position, it might be 10% of your position, but you're never going to capture that full reward unless you just trail with a stop properly. And that trailing with a stop properly would be based off pivots. So like Lucid today, if you got in somewhere early, I mean, this didn't really give much of a pivot until here, but you got like a mini pivot here, then you have your high, your higher low. When it makes a new day high here, this new day high confirms your higher low, so you can move your stop up to this pivot. Then you rips, makes a new high, pulls back, potential higher low confirmed by this higher high. Now you can move your stop from here to here. And then here, I mean, this was just crazy. Like this would be an example where maybe you want to, maybe not take it all off, but take a little bit extra off if you're trailing it, because you don't really want to give your position back to here. But this was a pivot. this was a pivot, and then once this made new day highs here, this was a pivot. So you can trail it down to there, and then I guess in this momentum, you can definitely trail it a little bit tighter. But to capture those full moves, like I know some of you guys were selling Apple a little bit too early this morning, where this kind of pivoted here to make a new day high, then it bull flagged, made a new day high, so you could have raised your stop from the low to here, then you could have raised your stop from the low to here, then you could have raised your stop from the low to here, and then you eventually would have gotten stopped out over there. But you almost owe to capture that full move, especially with momentum. You're probably never gonna be able to just see the top and sell the top, unless you get something crazy like Lucid, which that was pretty capitulatory action for sure. But I like to say you gotta take a little bit of pain for the full gain. To capture that full move, you almost always have to trail and trail and trail and eventually get stopped out. If you trail it properly and the momentum's there and the trend just keeps going and going and going, wherever you eventually get stopped out of is probably going to be higher than where you initially thought you should just sell it. So I usually, market orders usually to get in, not usually to get in things, but if I'm ever using a market order, it's probably just to get in something, and then limit orders to sell and take profits. And then I always try and trail either 25% or 10%. I just try and trail it, and I either let myself get stopped out of it, or I don't get stopped out of it, and I just keep trailing, and I make more money than I thought I would have. So I hope that makes sense, TJ. Pat, can you talk about the advantages and disadvantages of using a buy stop long order for opening drive plays? When do you choose not to use? The advantage is that it's a big advantage because you don't have to think about it with a buy stop order. For something clear like Apple 150 today, or like Lucid 28 yesterday. Lucid opened 27.69, and in the first minute traded through 28. You don't have to think about, the advantage is you don't have to think about it, and you don't have to like second guess yourself. Like you're not gonna, you don't have to think about it, so you don't have to be fast with it. Like your order's just there, it's gonna trigger, you're gonna trigger yourself in, and then you can be quick with getting your stop in, getting your offers out, and everything like that. But if you don't have that buy stop in there, you might miss it, which happened to me with Lucid yesterday. It probably happened with some of you guys as well. If you didn't have a buy stop at 28 for Lucid, you probably weren't fast enough to market in. And if you're marketing in, you're probably getting like 28.20s or something like that. So it's advantageous because you don't really have to think about it. One, it's fast. Two, you don't have to think about it. You don't have to watch Apple trade up to 150, and then all of a sudden you're thinking in your head, oh, but what if this fails? Maybe I shouldn't buy this. Maybe this fails. Maybe I'll let it go through 150, and then maybe it comes back down, and I'll try it again, like blah, 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 all that overthinking. It eliminates that overthinking. You set it, it goes, it triggers, you're in, and then you evaluate your risk. The disadvantage would be slippage, where sometimes you got to be a little bit strategic with how you do that depending on what name you're trading. So like Apple's pretty thick. You probably could have had a buy stop at 150.01 and probably the slippage wouldn't have been too bad, maybe like 10 cents or something like that. But for the most part, Apple's pretty thick. But something like Lucid, which is definitely still pretty thick but trades crazily, if you have a buy stop at 28.01, you might get some bad slippage in that. So usually you kind of, like, I don't want to say you can kind of just feel whether it's going to go or not, but like that's the only way I can really describe it, is you just, the technicals are there, the volume is there, everything's there. It should go, right? Like that's what you should be telling yourself. It should go. You shouldn't be playing a breakout trade and saying to yourself, this probably fails. Because if you're saying that to yourself, well then don't take the trade. But if it should go, then I like to buy the figure itself. So I would have like a buy. So to get rid of that disadvantage of slippage, I'd buy like the figure. I'd buy the breakout price in itself. But when you do that, you do risk it failing. You do risk it triggering, or even not triggering, and just printing that figure and having it fail and come back down. But if you think it's going to go because the volume's there, the technicals are there, and it should go, then I think it's worth it to just buy that figure and take that risk because you're anticipating that it should go. But yeah, so the disadvantage would be slippage. And the advantage would be you don't have to be super fast. It's just going to automatically trigger you in, and you don't have to think about it. You don't have to second guess it. It triggers you, and you buy the ticket, you take the ride. So Apple says despite supply constraints sees year-over-year growth in sales. Supply constraints now affecting all of Apple's product lines. Yikes. Supply chain constraints had larger than expected impact. Yeah. Where's Apple trading now? It's up a little bit. Bounced off. Yeah, that mid 144 is 145. Ended up being decent down there for sure. But Apple and Amazon, no bueno. It's going to be interesting to see how these trade tomorrow. Apple's probably going to be an interesting opening range drive breakout trade tomorrow, either to the upside or to the downside. Lucid did average volume today in about the first 30 minutes. Yeah, that's crazy. And that's what it takes to make those stocks go. Like, you need that volume to go. You need them to turn the float over and over and over. I don't know if Lucid turned its whole float over today, but it probably did, honestly. I mean, look at this volume today. This is the highest volume day ever. Yeah, it is. By like double. That's what it takes for these names to go. It was the same thing on the first DWAC day when DWAC went to like 50 or whatever. It's just the volume, and they turn the flow over and over and over again. That's how these things can keep going. That's why a Lucid can trade up 30% today while an Apple can only trade up a couple of percent. It's just volume mixed with the float. So yeah, Lucid doing its average daily volume in about 30 minutes. I mean, that's huge. That's huge. It's crazy. So it makes sense why it was able to go today. Really liked your analysis on Lucid. Thank you. Could you do one on Chewy? I had it earlier in the week and did not focus enough to cushion to swing, and it took it off my radar because I was frustrated with failed breakouts, and then today, boom, while I was not looking. Yeah, so Chewy came out as a Motley Fool pick today, but before this Motley Fool pick came out, they were sweeping it and sweeping it and sweeping it. Chewy... So 67.50, a bit of a level for Chewy, and then 70 was definitely a level as well. You can see 69.94 high here, 69.89 high here. So 70 was your level for Chewy. I forget when they really started to sweep this and when I started to post that, but 70 was your... this looks hard here, honestly. I don't think 70 is your level, but I probably would not have bought through 70 here, given the move that it gave into 70. I would have thought that this would have had more trouble with 70, and honestly, it probably would have if this, Motley Fool pick news wasn't coming out, which, did those sweepers get lucky? Maybe they just got lucky, but honestly, this looks kind of hard to execute for Chewy here. The only thing you can really do would be buy through 70 and use this as sort of an initiation bar. Low as you're out. You can determine it's an initiation bar by the volume. The volume is definitely not spectacular here, but it is the highest 5-minute volume bar of the day up to that point. And usually the highest 5-minute volume bars are going to be the open or the close, unless like news comes out or an initiation breakout trade happens or something like that. So honestly, for Chewy, this looks hard, and I probably wouldn't have taken this trade myself. But if you have been watching it and paying attention to it, 70 was definitely your level here. I traded through 70. The volume did pick up here a bit. So you could have bought this through 70 with this initiation bar low as your out. You're relying on pure momentum, but it was getting swept into this move as well. So, momentum, sweepers give it the juice. The momentum was kind of there. But again, this looks kind of hard. You said you were swinging it. You didn't have enough. You didn't have enough cushion to swing. Yeah. That would have been, I don't think that's really a great trade, but that would have been the only thing you could have really done with this Chewy, is buy through this 70, identify that this 70 when it's trading through is giving the highest 5-minute volume bar of the day, so it is a bit of an initiation bar. So you buy through 70 versus the low of this bar. You're relying on pure momentum, but the momentum traded here and paid you. So that would be my analysis on Chewy. I don't think that was easy, though. I probably would have passed on that trade just because, again, this move into 70 here. It's better when it if this were to move and give this little pattern right here in front of 70, you got to move up into the level and then you consolidate and rest a bit and build into that level and then it breaks. That's better than it just giving a huge move into 70 and then still going, because again, you're just relying on pure momentum. Any opinion on MRO? Marathon Oil. This MRO catches long dated option flow, which is good. If you like it as a swing name, that's good. You want to see long dated option flow. I can go and take a look later at what strikes they're buying. I feel like they're buying out to March in this thing. I can't remember exactly what they're buying. It might be March 20s. But this looks great on the daily here. Bit of shooting star in extension, but it's building out a nice bullish consolidation. Big move, chopping, consolidating sideways here. 16 is your support level for MRO. I know the daily 21's a little bit lower here. If you're swinging this and you really like it, I think this should hold 16. And then if you want to add into it, I would be careful adding in this type of name. This isn't exactly a momentum name. It's not really a great day trading name. But if you're in it, or if you're not in it but you like it and you want to be in it, 16's your level. It should hold 16 going forward if it's going to, resolve this bullish consolidation higher. And if 16 doesn't hold, 1550 is not perfect, but 1550 really should hold. But this is building out well. 16 should hold. 16 is your level for MRO. So tomorrow morning, what if sell-side analysts might come and lower their rev forecast for, I assume you meant to type Amazon, Apple. What happens to these two stock price actions? Staying here or going much lower? Hard to say and hard to predict that. Amazon's last quarter, they had this huge move down, but then the day after, it didn't really do too much. It eventually, a week later, gave a move lower, but it really didn't do much after this huge move down. It kind of just consolidated, and Amazon looks like the IWM here. It's just this huge year-long consolidation. You got pretty big support at 3,200 for Amazon, and then 3,500 resistance. Hard to see what it does. Could it trade down to 3,200? Yeah, for sure. But really, I don't care too much about what the analysts say. I just care about the actual reaction that it gives tomorrow. So again, just watch for those opening range breakouts for Apple and Amazon tomorrow. Amazon's bigger, thicker. So you probably want to wait 2 to 5 minutes in Amazon, as opposed to Apple. Apple might give it in like 30 seconds. But again, just, wait, let it open, let it trade a little bit, develop a little bit of a range, and then buy through the high or short through the low. And obviously these are pretty poor results, so I would be inclined to short through the low. But the price action is the price action. So if Apple opens and it starts getting bid up right away and just trades through the high, then again, it is what it is. The price action is the price action. So we'll see tomorrow how they resolve. And yeah, I mean, I'm sure analysts are going to come in, and if anything, they're probably just going to defend them, but you might see some downgrades. EPS. Wisdom Tree US Large Cap Fund. Sahil? Assume this is what you wanted me to type up. This is so... I don't think we're even allowed to trade this. Pretty sure you need the name to be doing 100K average daily volume to trade it. I mean, look at this intraday chart. Look at this 5-minute chart. This thing went like 30 minutes today doing 0 volume. So, I don't think we're allowed to trade this. I'm pretty sure that's the rule, is it needs to be doing over 100K average daily volume to trade it. But technically speaking, 48's your level. You got your move up here. Now your bullish consolidation. 48 was building out. Now your ADMA has caught up to 48. It held 48 on this day. 48 is your level to watch there for support. 48 should hold if it's going to keep trending higher. But again, I don't think we're allowed to really hold this or trade it. So just be aware of that. People were calling this out on Reddit. Really? Interesting. I don't think Reddit traders can really move this if it's like a large cap fund like that. I don't think, but but 48's your level there, technically speaking. Could I repeat how I use my orders? I assume you were referring to DJ's question. I think it was DJ that was asking that. Basically, usually if I'm getting into something for like a breakout trade, or I think something's gonna go, I'll mark it in, or I'll uptick in, or I might BQ and try and buy at the bid. But if something's gonna go, like Apple through 150 this morning, like you don't want to see Apple trade up to 150 and then put a bid in at 149.95. Like if Apple's gonna go, it should not fill your bid. It should just go. So you want to market buy there, or have like a buy stop, which basically turns into a market buy at that level. So market buy in, and then I limit offer out for covering my risk for my 1-to-1, for taking profits, an extension or anything like that. I'll limit out. I get to add liquidity that way as well. And then I trail with, it depends on the type of trade too, obviously. But like for something like Apple today, or if anyone was long Lucid today, I'll trail with like 25% or 10% of the position. And again, in order to capture that full move, like if something's just going to trend higher and higher and higher all day and close at highs, I mean, you're never going to be able to sell the top intraday because it might top out at the end of the day. So you just got to trail on the 5-minute. And then if it really keeps trending past like 11 o'clock, like into noon, then you probably got to start trailing on the 15-minute, because oftentimes you might get a bit too extended on the 5 and you might get stopped out on the 5. Like here, for example, I could see someone arguing on the 5-minute, and this didn't really stop you out either, but let's say it did. Someone could raise their stop to this cute little 5-minute pivot low, and this might stop you out right here and then just keep trending higher. So like by this time, by like 11, 12 or so, you want to start trailing on the 15-minute. The 15-minute is going to be a cleaner trend. No, I wouldn't do bar by bar just higher highs and higher low pivots. Because if you're doing bar by bar, I mean, like look at this bar right here on the 15-minute chart. Like this stopped you out right here on the 15-minute, but then kept going. And yes, I know eventually you would have gotten stopped out of it, but just proper higher highs and higher low trails based on either the 5-minute, or if it keeps really trending by like 11 o'clock noon, you probably want to start trailing on the 15-minute chart. But you're never going to be able to sell the top really. So with that last 25%, 10%, just trail it and let yourself get stopped out or not. And you might not get stopped out and you might be able to keep it. And, you know, instead of making $2 and selling for $2, you just trail and you trail. And by the end of the day, you made $5 and then you swing it. And by next month, you made $20. So you almost, to capture that full reward, you almost always have to eventually get stopped out. You gotta take a little bit of pain for the larger gain. Trademark that. For your Lucid mean reversion play, what was your if/then plan if it spiked above 40, hit out, look to... yeah, sure. This isn't really... I wouldn't... If you're new to trading, you know, don't be shorting Lucid up here, please. That's not a beginner's trade. But the way I play extreme extension like that is... No, I don't have a stop at the high. Things that are extended can always become more extended, but I'm looking at factors like, you know, 5-minute RSI. Volume is really important as well. And then again, just extension on the 5 and the 15-minute ADMA. And what I do, it depends on the name, it depends on the trade, it depends how spready that name is, what the range is, or something like that. But I start and I tell myself, okay, I might be early. This might keep going and keep poking higher and extending higher. You know, extension always corrects, always. It might be through time, it might be through price. It's definitely annoying when, you know, you're short and you get a time correction and not a price correction. But you always get some type of correction. And if you short and get a time correction, like then you can put your stop out at the high, because you got your time correction. Basically, when you're shorting extension, you're expecting a move back down to like the 5-minute ADMA, basically. So if that 5-minute ADMA catches up, well, there's your correction that you were expecting. So then you got to use your high as your out. But for like Lucid, I wasn't just shorting versus like 40, because again, you know, it was extended at 38s, 39s. At 40, you know, why would I get out? It's just going to be even more extended. That's even more of an opportunity. And the volume was absolutely crazy there. So I build into it and I leave myself a little bit of room in case I'm wrong. This isn't like a beginner type of trading strategy or anything like that. And it's hard to measure your risk and your reward doing it. But like, for example, like just to like keep numbers simple, like let's say my max tier in Lucid would be 2,000 shares. I might start with like I'll pick, like, again, you know, extreme extension, extreme volume. This is acting capitulatory. This most likely capitulates and has some type of correction. It might not just spike right back down, but even if it's a time correction, I mean, your ADMAs on all your time frames, your 5 and your 15, was so much lower there, that it's going to probably chop around for like a solid 20 minutes, 30 minutes or so, before it keeps going. So like, say my max tier size in Lucid's 2,000 shares, I'll start where I think it is capitulating, but I'll leave myself room for more in case I'm wrong and in case it does keep extending even further, because that further extension is opportunity. You know, if I'm shorting at, you know, 39s when the 5-minute ADMA is at 36s, you know, I'm not gonna stop out at 40 when the 5-minute ADMA is still at 36s. That's an opportunity. So say my max tier size is 2,000 shares for Lucid. I'll start in the 39s with like 400 shares, and then I'll try again. It's like a cute short. I'm not betting on a full reversal in Lucid here. Honestly, this traded much lower than I would have even expected it to. All you can really expect in extreme extension is a price correction or a time correction to the 5-minute ADMA. So I'm just trying to make like a buck, you know. It depends on the name. Sometimes it's just 50 cents, sometimes it's a buck, sometimes it's a buck and a half or a couple bucks or something like that. But if I'm trying to, like, say I'm trying to make $1, I will try to make $1 where I have $3 in extension, and I'll leave myself room for, okay, well, if this extends another $1, another $2, like, I don't want to be stopping out. That's an opportunity, because if I'm trying to make $1 and it's $3 extended at that time, and then it trades up $1, like, then it's $4 extended. It should be even easier for me to make that dollar. And you could see it with Lucid today, the way it was going. It wasn't just like straight up and straight down. It was like, whoa, 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 whoa. Like, it's back and forth. The tape's going crazy. It's capitulatory action. So say, my max tier is like, my full position, not my max tier, but like, say I wouldn't want to be short more than 2,000 shares of Lucid. I'll start with 400 shares, looking to make like $1, and then if it trades up another 50 cents, another $1, I'll add another 400. If it trades another, straight up, and it's got to be, again, it's like extension. It can't, if I shorted 400 here, and it just chopped around for 20 minutes, and then traded higher $1, no. I'm probably using my stop. That's the high a day there. Because again, it gave you a time correction. You're expecting either a price or a time correction. It should happen once you get this extreme extension and this capitulatory volume. It should happen. Not that it should, it will happen. But it might be a price or a time correction. So again, if I'm $3-4 extended and I'm looking for a cute short, I'm not trying to make that full $3. I'm only trying to make like a buck of it or so. Because it should be doable. So again, if the full size amount that I would want would be like 2,000, I would start with like 400, and if it trades straight up another $1, another 400, straight up another $1, then that last ad might be for like 600 or something like that. Facebook was another good one today here in this move up. This was pretty straight up extreme extension, not as crazy as Lucid for capitulatory volume, but still big volume there. But say you short like 320 into 324, you don't want to use 324.01 as your out. This move up to 325 was scary and painful if you started at 324, but that's an opportunity. You're extended when you're at 324 and your ADMA is like 321, you're $3 extended and it's capitulating. You think you should be, if it's $3 extended, you should be able to make a buck for the move. But you don't just go full boat here and look to make that $1, because if you go full boat there and extended, remember, extended stocks can always get more extended before they correct. So you don't go full boat there, you go like 25% or something, and then this even further extension, like, that's opportunity. If you like shorting it, trying to make $1 when it was $3 extended, you should like it even more when it's $4 or $5 extended. But if it's all about sizing too, sizing's so important. If you go full boat here and you can't afford another $1 higher, like, you're gonna mess yourself up. You're gonna get yourself trapped. You're gonna get deer in the headlights, which has happened to me numerous times. That's why I've tried to get better and better at doing this type of stuff. And again, this is not for beginners at all. It can be very scary. I've definitely gotten hurt doing these types of things, but I've gotten better and better at it over the times of my mistakes. So I hope that helps and makes sense, Joe C. Basically, extreme extension like that, I'm not using an out, but I'm not going like Apple versus the low through 150, like, that's full boat, or not, not full boat, but you're buying your full position through 150 there. Whereas like Lucid or Facebook, I'm not taking my full size at 39s, because I know extreme extension extended stocks can get more extended, but that further extension is just further opportunity. So I'm not going full size there. I'm only starting like 25% size, and if I nail the top that first try, whatever, I still make a little bit of money. But if it extends even further, I add as part of my game plan, because I know something with extreme extension can even, extend even further. So then, I go from 25% to 50% of my size. It's part, it's extension, it's extending even further. I'm down money on it. I started too early, but it's part of my game plan. I start 400 shares and then I go to 800 shares, and I know, I can take myself up to like 2,000 shares or something like that. So it's part, it might be a little scary and it's crazy in this capitulatory action, but it's part of the game plan. So yeah, that was kind of like long, but I hope that makes sense, Joe. / anyone else that's listening. Let's see what else we got. Starbucks getting hit off earnings? Yeah, a little bit. Ooh, Starbucks, I like this 110 level. Starbucks is a name I want to own. I don't own any right now, but this is a name to own and tuck away. People are going to keep going and buying their coffee. Starbucks is a good name to own. So we'll take a look at that tomorrow. Thoughts on Facebook after today's bar? Potential bottoming candle for Facebook here. Nice volume. Facebook had a lot of news today too, though, so that's probably why you got that volume there. But 310 is a bit of a level. It's still sloppy though. I don't know. It's a potential bottoming candle, and you could potentially be looking to be in this versus 310, but now with poor tech earnings, it's going to be hard to see this just trading right up right away. It's going to be sloppy here. So you have a bit of a bottoming candle here with confirming volume, but you're just going to trade right back up into this slop. This whole area is going to be tough. It really needs to get back above 340 to look better for Facebook. So Facebook looks like it might have bottomed, but it's still going to be tricky going forward. Was I using a buy stop limit order? If yes, no, I don't use buy stop limits. If you're using a buy stop, you want to get in. If you're, stop limit orders don't make any sense to me. I don't get the rationale behind them, because if you're using a stop, it means you need to get out or you need to get in. If you need to get in, but you shouldn't care about 10 cents of slippage or something like that, because you're probably not going for a 10-cent move. You're probably going for $1 or a multi-dollar move there. So I don't really get the rationale behind stop limit orders. They've never made sense to me, and I've never used them. So if you get slippage on it, it is what it is. But if you're buying a breakout, if the breakout's going to work and you're going to get momentum, then a slippage, it probably isn't really going to matter unless the breakout ends up failing, which in that case, it fails either way. So, it is what it is. Cool. Let me just see if I missed anything on YouTube. Besides Marty on YouTube, besides FinViz, any other simple tools to scan for stocks? I like being able to pinpoint specific stock. Awesome. Thanks, Marty. No, I find my stock ideas just through my morning research. So just going through all the headlines, all the macro, I start with the macro headlines, and then I go to the single stock headlines, and then I go to sell side analyst upgrades and downgrades, and then I look at the charts for all of them. I look at the volume for all of them, the pre-market volume for all of them, and I combine the news with the volume with the technical daily chart setup, and that's how I get my plays for the day-to-day basis for the morning meeting and stuff like that. So no scanners really. The only scanner maybe you might want to check out is something like like a opening volume scanner. That could be good because often we see these in play names. They work well once that opening volume is really big. Like that opening 5 to 15 minute volume is significantly larger than what it normally does on a normal day when it's not in play. But other than that, no, Marty, I don't really have any other scanners for you there. It's just purely based off news and going through lots and lots of charts and reading lots and lots of news. Hey, Pat, can you explain why Lucid broke today, even when it had the news yesterday, then nothing? Yeah, Sebastian, it was a gap and go trade. Just purely technical. Lucid 28 is a big level that it failed numerous times. It traded through 28 yesterday, but then back below. Today was a gap and go play for Lucid. So again, 28, like that, you identify your level. 28 was super important level for Lucid, which it failed at yesterday, so that sucks. But then this morning, coming into this morning, it was gapping over that very important level. So Lucid was a potential gap and go trade idea that we had for our morning meeting. So gap and go, it's gapping over that important level. It's literally going to do either one or two things. It's going to gap and go, which it did today. It held the level and broke out, but it was it didn't necessarily break out. It was a gap and go to the upside. Or the level's still going to be important, aka sellers are still going to be there above that 28 level, in which case Lucid would have opened in the mid 28s today and gone smacked back down right away, and within the first 5 minutes probably would have been right under 28 again, and it is what it is. But Lucid was a gap and go. It opened mid 28s, it came down, it held 28 almost perfectly. 28.08 is the low, and then traded back up and traded through day highs. So that's why Lucid went today. It was just purely technical gap and go trade over this 28 level where it's failed at repeatedly, days and days and days, and then finally today it did not fail, but it held. So that's why Lucid went today. All right, I think I got everything. So yeah, good meeting today. Good day today. We had some fire call-outs for sure. Apple and Amazon both missed. Dun dun dun. So we'll see what the action is like there tomorrow. And tomorrow's Friday, end of the week, end of a crazy week for sure. So have a good night, everybody, and we'll see you tomorrow morning.